Dear members, today 2 sessions will be there on direct tax law compliances. So let us hear our trainer CA Pooja madam. Welcome you, madam.
Thank you, sir. Good morning to all. So, after a calculation of our 5 heads of income, so classification, now we have arrived at total income. So, after that, the next is calculating the tax liability. So, there are two types, right? Sorry, tax. One, self-assessment, paid, paid at the time of actual liability is created, right? During the filing of IT return. Advance tax. Advance tax is paid during the financial year when event is going to occur. And advance tax means payable in the financial year, immediately where the tax liability arises. Instead of lump sum amount, instead of paying as self-assessment tax, we are paying in the form of advance tax. Okay. Then advance tax shall be calculated by estimating current year income, then applying the tax rates. Assessee is required to pay advance tax if the net tax liability for the advance tax is 10,000 or more. Exception is where the senior is a resident and income is not falling under the head of business and profession. So, due date to file. Advance tax is on quarterly basis. So on a 15th June, that is 15% of our advance tax will be paid. If on or before of 15th September, 45%, then December, 75% for our third quarter, then for my final quarter, it will be 100% of advance tax. And if the amount paid before 31st of March also is considered as advance tax, and if the income is liable for tax under a presumptive basis, then in such cases you should pay the advance tax on or before of 15th of March. Calculation. Calculation is similar to actual tax liability, how we calculate, but here estimated incomes will be there. And for advance tax, capital gain is exempt from advance tax because we don't know whether we will sell the asset. Okay. So the first calculation of 5 heads of income gross, then any adjustments of brought forward losses, then deductions, claim taxable income, then if any rebates are available, then rebate, then surcharge, tax payable, then calculation of net tax liability. After reducing the TDS, estimated TDS, okay. If there is a mistake, if there is a mistake while paying the advance tax or after payment of advance tax, do I have the correction channel to have the option to correct my challan? Yes, in income tax portal, you have an option to correct the challans if assessment year has been like instead of financial year 23-24, you have put 24-25 or 22-23. In that case, the correction is available, your major heads and your minor heads. So first we need to log into income tax portal. As you file the advance tax via income tax portal, you can file. So there we have an option for challan correction from a service tab. In that, create a challan correction request. Then, what are the changes to be made? You can apply there. Then within 7 working days, the changes will be amended and will be communicated to the registered mail ID. Registered mail ID. So what if I don't pay advance tax? Is there any penalty if I don't pay advance tax? Penalty in the form of interest. Yeah, interest will come. Only 194, sorry, 234C? Yes. What are the interest which we pay? So one is 234B, okay, where interest for non or short payment of tax. If the interest is not applicable unless if the tax liability is paid at least more than 90%. 90% of tax liability is paid in the form of advance tax. So the calculation for advance tax, interest on advance tax is advance tax for short paid, okay, whatever the balance amount, then into 1% of rate per month or part. Part also is converted into full and into the period. So period will start from 1st April of assessment year. Whereas in 234C, it will start in the current year itself because at the end of the financial year, when your tax liability is there where you have not paid the tax, in such case 234C will attract, okay, then interest is at what calculated on the rates. So if you have not paid 15% of tax liability that should have been paid, then on that difference amount till when the amount will be paid, still that period, the tax will be calculated. Okay, for 3 months, year three, and year the actual. Clear? So, one question. So, can I get it? Advance tax liability calculated for Mr. Ajay. Please calculate the advance tax and interest thereof. 100% paid before 31st March, advance tax, interest is not liable to be paid. It is not applicable. No, no, it is not under alternate regime. Consider in the old regime only. If you consider in a new regime, it won't be tax liable. No, normal, excluding 44 AD. So if under section 44 ADA profession, ADA 50%, then 20 lakhs, 10 lakhs. How refundable? Don't calculate, calculate as normal. Um, yes, taxable income is 7 lakhs 33,000, but taxable income is 20 lakhs, right? Yes, 12 lakhs, 8 lakhs, FD, interest on FD. So even though I'm an individual, but I'm not a senior citizen, then I can't claim deduction for interest on from FD. So my total income is gross total income is 8,10,000. So contribution to PPF and LIC, which will amounts together is 65,000. Then ATD, it's within this bracket of 25,000. Still you're done. Then So since I've crossed my basic exemption limit, I won't have any rebates, right? So 12,500, that is from 2.5 lakhs to 5 up to 5 lakhs, 12,500. The next 5 to 10 lakhs. So balance amount 2 lakh 33 into 20%. Then education says tax liability. Then STDS 30,000. So I should pay advance tax of 31,464. In that, for my quarter one, I need to pay 15%. So 15%. So 15% on what I will take? My first quarter tax. 15%. Or it is an example. Yes. So I'll be taking for the calculation by end of fourth quarter, the total 31,464 should be paid. Okay. It is a cumulative. Clear, sir. So each quarter you will be liable to pay the balance. Yes. Since he is a freelancer, so he can't claim standard deduction. So if he wants to opt for new regime, okay, there is no standard regime, new. So my total income up to gross income is same. So the deductions are not allowed. Okay, in my new regime, since I've crossed the limit of 7 lakhs. So then I can't claim the rebate. So up to 3 lakhs, it is exempt, right? So from 3 to 6 lakhs, it is 5%. 3 to 6 is which amounts to 3 lakh into 5%. The next is from 6 to 9 means balance 1 lakh 33,000 into 10%. So my total tax liability comes to 28,000. So in this case, there is no need of paying the tax, advance tax. Okay, if I take the case, say it is of, I'll take example. Okay, for new regime, I'm speaking about new regime. Tax liability. Yeah, in new regime, there is no need of advance tax since TDS is receivable already. Where my liability to pay, where it is more than 10,000, advance tax is applicable. So if in case, say if in case I'm taking where my gross professional income is 25 lakhs and for expenses 14,000, okay, I can claim in old regime, the total income is 10 lakh 33,000. So up to 5 lakhs 12,500. Then then next 5 to 10 lakhs. So that is of 5 lakhs now. Right? 1 lakh. So balance 30, you will be paying at 30%. So advance tax liability will be of 97,296. In new regime, I'm doing. In new regime, the tax liability. So from uh, 3 to 6 lakhs on 3 lakhs, 3 lakh into 5%. Next, 6 to 9 lakhs, it is 3 lakhs, right? Then 9 to 12 lakhs. 9 to 12 lakhs is 15%, where my amount is 11 lakhs 10,000. minus 9 lakhs. 76,500. New regime. So in my new regime, 49,560. In this case, I need to pay the tax. The next comes with TDS. So I guess in last 2 days back, many clients were getting the notice to pay advance tax. Anyone has received a general notice if their turnover as they when as per their GS information from a annual information statement, many of the clients have received advance tax notice. Yes, this is that either if you have not paid during the year, at least pay before 31st March. Yeah, either by a note, not by a notice, either it's a notification as per SMS or as on like SMS or a mail. Yes, if they have a specified turnover, okay, in such case also they have received notice. Yes. So if in certain, as per income tax, certain incomes are exempt, like any trust income or where they're registered, or if any what you say farmer producer what farmer producer companies in such where their income is exempt only on the condition that they file the returns on the before due date, except all are taxable, right? If their income is less than 5 lakhs or 7 lakhs, in general they won't get. If their income is more than 7 lakhs total income based on their GST, yes, based on their GST turnovers, they are getting the mains. Okay. The next, we are moving towards TDS. So, tax is deductible. Tax is deductible from our particular payment only if the same is taxable in India. It shall also be payer of the income who shall be responsible for any penalty, prosecution, or interest, etc. for any default under this chapter. Okay, it is deductible from the certain specified payment as covered by this chapter. Okay, if TDS is not deducted or should be deducted when the person who is rendering the service, okay, who is the receiver of the payment, such case the rate in force or the rate prescribed as per income tax or the rate of at the rate of 20%, whichever is higher. If it is 194I, 194O, the rate is 5% for e-commerce operators. E-commerce, these are the few sections under which the tax will be deducted. Other than PAN, not like. No, not other than PAN. When you have not filed your IT returns, TDS is deducted. So 192, how do I calculate? Similar as we did for what advanced tax, we will be calculating the my total income after deduction or uh, like they give an estimation form at the end or in the beginning of the April for the employees to fill what are the what expenses, investments plans. Okay, so all my investments okay will be for the deduction purpose. Okay, but then on this net liability will be calculated, then divided by 12 months. Okay, where payment of salary after basic exemption limit normal slab. Either which slab you are following, you can opt in your like when they are deducting the TDS. The next, then premature withdrawal of EPF amount. Threshold is maximum 50,000, no TDS will be deducted. If more than 50,000, TDS at the rate of 10%. And budget 23, TDS rate for EPF withdrawal without a PAN. Now, without a PAN number is now 20% from the previous maximum rate. Okay. The next, interest on securities, debentures 10% and exemption of TDS on interest from listed debentures has been removed. Therefore, the tax has to be deducted on the interest of such specified securities. Okay, before there wasn't specified securities interest also were exempt. Now it has been removed. Okay, it is bond of 2003. Next, this is not them. Okay. Payment of dividend. If the dividend is more than 5,000, then 10% TDS will be deducted. Then interest from other 194A, interest from other than interest from securities. That is interest charged by your banks. Where if it is senior citizen, 50,000. Other than senior citizens, it is 40,000. Okay. Then interest from other than interest on securities of under section 193 and interest from bank post office 5,010%. Yeah, withdrawal. Yes, withdrawal is taxable. If you're withdrawing in a lump sum, it is exempt, right? Premature withdrawal, it is taxable. It is considered as the salary. Winning from lottery, 30,000, sorry, 30%. Then online gaming, 30%, it is treated as gambling only. Okay. The horse race, 30% TDS. Payment to contract. If it is a single transaction, 30,000, less than 30,000, no TDS. Or if it is aggregate, increases 1 lakh, then TDS is there. So 1% and 2%. 1% individual and HF, other than individual HF, 2%. Commission of brokerage, 194H, 15,000, this is 5%. Okay, if it is more than 15,000, 5% of commission. So TDS to be paid. Rent of your plant and machinery, more than 2 lakh 50, 2 lakh 40, 2%. If land, building, furniture, more than 2 lakh 40, 10%. Okay. Now I have rented a residential house. Okay, which rent is 30,000 per month. Is TDS is deductible? No. Okay. There was an ABC company. ABC company. Okay. The rent of 30,000 was payable for director's house on behalf of directors for estate. In such case, TDS is deductible. See, I'm paying the rent of the director. Yes, TDS is deducted. Required. Yes. It's more than 2 lakh 40. TDS is required. Immovable property. Sale. When sale more than 50 lakhs, 1%. 194 IA. Then rent payment by individual or HF not covered above 50,000, 5%. Then joint development agreement. When payment under GDA no limit, 10%, direct 10%. 194J, 10%. You can take a look of all. See, and 10%, and you have a 2% also. 2% is when you are giving a technical service or exhibition. Okay. So, my question is, I'm providing an accounting and auditing service. TDS on this, TDS rate when I'm providing accounting and auditing service. I'm not paying, I mean, no technical service, normal accounting and auditing. 194J, 10%. Okay. So, the company required a software. Okay. Software where only with 1%, okay, barcode scanning, barcode scanning, entry to be passed. See, they have a barcode scanning technology to file an entry. Okay, entries, accounting entries to be passed. Then next is when you put the bank statement, soft copy. Okay, scan and in the software, it should automatically your bank accounts entry should be passed unless there is an error or sorry where the what the software is not able to understand. That time you need to input the data. 2%, yes. Okay, a person can give even an accounting and auditing service or a technical services also. But for what you need to understand. My question is charging 2%, have a clarity that unless I'm providing a technical services, 10% is charged. Next, cash withdrawn more than 1 CR, 2% TDS deducted by bank side. They'll deduct from your bank account. Then where it is called what other than what bank, no sorry, in cooperative societies 3 CR but nationalized bank 1 CR, and 194N cash withdrawn in case of person not filing ITR for last 3 years, original filing due date is expired. Okay, such case 2% and 5%. If if the cash is withdrawn by cooperative society, the limit shall increase to 3 CR instead of 1 CR. Okay. How can the bank know? How can my question is how can the bank know that you have not filed your IT returns? How can the bank know that you have not filed the IT return? Illustration. See, unlike GST, in GST, if you put the enter the GST number, you can see whether the particular person has filed the what GST return or no. Okay. Whereas PAN on based on PAN link. Okay. Do you know one thing? If you have a current account plus OD, you need to submit your financials. Yes, financials comprises of your IT returns also. Else, your account will be freezed. And if you're doing a business, you can't do in your savings account, right? Yes. Every year renewal. Yes. there is a hold. We are not renewing. How? Such case you can, where, so it is, the range is where 20 lakhs to 1 crore. Here, 20 lakhs to 1 crore, 2%. If it is, when it is more than 1 crore, 5%. But you have a cash withdrawals. So there is a regular cash withdrawals annual information statement that is the withdrawals track the bank will have. So they will check since, so when annual renewal, every time they'll put a tick mark whether you're what submitted your IT returns or no in a current transactions. Then pan linked. Pan linked, if IT returns are not filed, they'll deduct on that basis also. That one. And if it is an e-commerce payment for the sale of goods or provision services by e-commerce operators, e-commerce through digital or electronical platform, it is more than 5 lakhs, 1%, and 5% in case of PAN is not furnished. 194. Oh, who's my e-commerce operator? Swiggy, Zomato, right? So when they sell out, okay, they were maintaining, example, a website, okay, where they were putting all the informations. That's website is sold. In such case, TDS is applicable, right? Book my show, yes. And I'll say for how much compliance they need to follow. But here e-commerce don't get confused. GST, TDS is there. Sorry, tax collection, TCS to be collected at 1%. Yes or no? Yes. The next, RCM basis tax to be paid. Next, income tax. Income tax, what, advance tax? Then TDS. TDS. Okay, and here RCM, one more. Good area to work. Then if you purchase a goods, more when in a business, if you have more than 50 lakhs transaction in that but 0.1%, then virtual assets 1%, non-filer no limit 5% or 2 times of rate. Clear? So non-filers does not include people who is not required to pay IT returns when they are within the basic exemption limit. NRI, in our non-residents who do not have a permanent establishment in India. So then TDS rate in case of non-availability of PAN. So forms, TDS return forms are 24Q, salary, only salary. Estimate at the starting during the first year, first April, then deduct over a period of 12 months. That's it. 26Q, other than salary, mainly what regularly we see professional fees, contract, then if any interest loan has been taken and the interest paid and rent, normal. generally, and quarterly statement of a deduction of tax from interest, dividend, or other or sum to non-resident or foreign companies. The next statement of TDS deducted against the main immobile property. 26Q, sale of property when the sale value is more than 50 lakhs. In such case, need to file 26Q. Then, if it is a challan cum statement of deduction of tax under section 185 IB against the tax deducted on the rent of the property. Then next, quarterly statement for TCS 27 EQ. Due dates. So every month we need to pay TDS for the previous month on or before of 7. The next, then quarterly returns after the quarter completion, the next month, instead of, see, for first quarter, April, May, June. So I'll be filing the return on 31st July, except for last quarter. So last quarter TDS can be paid up to 30th April. Then return filing is 31st May. Next, income tax filing due dates. Individual or company or a firm which is not covered under tax bracket, it is 31st July. Then if it is covered under tax audit, tax audit report should be filed 31 before 30th September. The next IT return before 31st October. If in case where there is transfer pricing, such case 30th November, revised return 31st December is the last, and belated return 31st December. It's not 31st March. See, when the return is not filed within due date, 31st July, example, then such case 234A attracts, that is from the due date of filing to actual return filed. Okay, the period 1%, the tax liability, whereas interest on late payment of advance tax, if you have not paid 90% or more, in such case 234B is attracted. 234C on installments. On installments, it is attracted where you have not paid. If you have paid the tax less than 15% or less than 45% for second quarter, in such case, interest on the under section 234C is attracted. So next we have tax collection at source. In certain circumstances, supplier is liable to collect the tax. In liquor or of alcohol in nature, 1%, KSBCL. So you need in the case of KSBCL, you need to deposit the money before purchasing the goods. Okay, so in that case, KSBCL collect 1% additional as the collection in the form of collection for the purchase of liquor. And timber wood under a forest leased 2.5%. As such, tendo leaves, tinders, scrap, sale of scrap 1%. Minerals like ignite, coal, iron 1%. Purchase of motor car. Instead of the car which is worth less than 10 lakhs, if you are purchasing more than 10 lakhs, almost all the cars are more than 10 lakhs. In that case, 1% is collected by the seller. The next is where the total turnover is more than 10 crores in previous financial year and receives a sales consideration of any products more than 50 lakhs, such seller must collect TCS upon receiving the consideration from the buyer on such amount over and above 50 lakhs. That is 0.1%. Yes. Then, other than individuals, okay, whose income exceeds the amount of, if my partnership firm 30%, LLP 30% plus 4%, yes, we will go to that each and everything. Next, corporates where my turnover is up to 400 crores, 25%. If my turnover range exceeds 400 crores, 30%, and surcharge 7% of amount. If net income exceeds 1 crore or does not exceed, then it is 12%. And alternate minimum tax is levied at 15%. Yes. See, while calculating the tax liability for AOP and BOI, what's the consideration? AOP and BOI is taxable at the rate applicable to an individual. It is taxable unless your income from AOP is less than basic exemption limit, that is 2 lakh 50. If it increases even by 1 rupee, it will be taxed at marginal rate. Okay. Then next, maximum marginal rate or rate higher than the maximum marginal rate. Interest paid by AOP to its member association of person or your flat associations will be no in that case. Any interest paid by association to its members or receive the interest in such case it is not allowed. It is not allowed as a deduction from the income of the AOP or BI. And salary or other remuneration paid to a member not deductible even in case it's so of actual services rendered by him, it is not deductible. The maximum before we had 30% plus 10%, right? Now revised 30% plus 37% plus 4%, it is 42.744. It's the marginal rate. If the taxable income increases, it can be taxed at marginal rate. The next question is there any dissonance in the partnership, calculating the partnership liability, partnership firm liability? No. Yes. Deductions. Sorry. What are the disallowances? Please mention the disallowances. LLP and partnership firm are same. Excess salary, yes. They have a cap, right? Interest is more than 12%. Interest on capital, yes. My partnership firm to allow the remuneration. First condition, up to 3 lakhs of profit. Up to 3 lakhs of profit, either 1 lakh 50 or 90% of book profit. The next is more than 3 lakhs profit, 60% of book profit. Okay, so this profit is calculated. Yes, this 60% on balance. This profit is calculated after disallowing the whatever the remuneration is allowed. The next, the amount. So your total income. Okay, from business income, first you will disallow, you calculate the remuneration, and if remuneration, actual remuneration or calculated maximum, whichever is lower, will be paid. Yes, interest disallowed will be added back while calculating the tax. Next, on total tax, 30%. 30% is my tax liability for firm and LLP. Depreciation only for Companies Act, right? Depreciation. If you're following the depreciation as per Companies Act for LLP and company. Now, tax liability to my NRI. NR. Is the income earned in India, is it taxed to non-resident? Income earned in India. Okay. Income earned outside India. Income earned outside India. No tax. I need to check even my residential status also, right? Okay. Now, if I am a e-commerce operator, but I don't have, but I don't have permanent establishment in India. In such case, e-commerce operator, I don't have, I don't have P permanent establishment. Agent is taxable, yes. Only if I have an establishment, if I don't have, if I am the online advertising company, providing an online advertisement, but I am residing outside India. I don't have establishment in India. Online advertisement. Okay. No PE, no permanent establishment. Such case, I need to file IT return. IT return. Online advertisement. No. Then there is an outflow of there is an outflow of amount from India to outside company. Agent is not there. There is no PE. Yes. Yes, sir. Please take care of that equalization levy. Yes. Equalization levy is leviable. So what is the percentage? What's my percentage? What is the percentage, sir? 6%. Yes, correct. 6%. What is the exemption? Exemption for levying the equalization levy. Exemption limit. No answer. Why no answer? Exemption, sir. Where it is exempted from deducting TDS. Equalization levy. 1,50,000. Yesterday we have done with that. This is a practicals which we do day to day. Equalization. So, advertisement in Facebook, where many companies give the advertisement in the Facebook, right? Why online exam? No, no. Why no exemption? Sir, if the payable, the service pay or service payable or received is less than 1 lakh, is less than 1 lakh, in that case, no equalization levy is collected or paid. Before making a payment, I need to collect 6%, right? Then pay TCS. So they are not liable. See, equalization levy, company is not liable. Today, we are getting the advertisements in Facebook, Instagrams, or YouTube's. Then they're paying equalization levy. If they have the permanent establishment or an agent in India, then he is responsible to file the return. Okay. What about trust? Trust, my one condition to file as a trust. What is my one condition? See, else your income, if you don't have the registration, one registration is there. If you don't have that registration, you will be charged at marginal rate as you're charged at AOP and BOI. Yes, 12A registration, ATG, 12A and ATG. Yeah, 85% as charity. Yes. Yes. In that case, it is exempt and I'll be filing under ITR, ITR 7. Right, sir? ITR 7. So, if my total income, if my total income is 10 lakhs, total income is 10 lakhs, purely from charitable purpose or from education, such case, what will you do? ITR 7. Whether it's exempted or taxable, 10 lakhs. Total income is 10 lakhs, whether it is exempted or taxable. How? Sir, I have a registration. During first 2 years before applying for the registration, you will be filing under section ITR 555. Sorry, under ITR 5. Yes, it should be less than 2.5 lakhs. Or if you are opting for new regime, 3 lakhs. If not, will be taxed at MMR here. Yeah, once I have a registration, it is exempt. ITR 7. Clear? We'll stop today. So any questions? So evening we'll be discussing regarding international taxation and assessment. 85% use. My one more question I missed. So from charitable trust, my income, okay, from charitable trust is 10 lakhs and business income. Why business? Either rental income or any other business I'm doing to sustain or for my administrative expenses. So in that I have 3 lakhs. Now you tell me, tax liability. What is the limit I can do the business at least? 3 lakh. Okay. If it is 1 lakh. Yes, not more than 25%. If it is 1 lakh, it is nil. See, corpus fund is the fund which is given for a definite purpose, right? So, like example, when we receive the government grants for any trust where it is definitely where the condition is laid, either it's a construction of building. Example, general fund where we give normal general donations. Yes, it is a fund used for specific purpose, corpus fund. See, for tax purpose, we will be calculating. But when you're filing under 44 AD, on your total turnover, you will be you will be calculating the profit, right? In that case, remuneration working is not there. So donation to political party can be claimed as deduction under old regime. In new regime, cannot be claimed. 192 TDS. Okay. So 192 TDS is, so in companies usually they ask the investment statement, estimation, that what would you do the estimations. On that basis, they'll take your salary. So whatever the salary which you have, salary one amount, okay, then your deductions. If you're opting for old regime or new regime, the deductions in respect to that. Next, calculate the total income. Then tax liability. Calculate whether new or old. Then next, divided by 12. So in case of a person, see, in case, imagine that he is this person, okay, Mr. Ajay is an employee of the company. Okay, that case, what will happen? In the beginning, your advance tax same up and till calculation of tax liability, it is same divided by 12 months. Okay, so 10,000 every month will be deducted. Then the last month actual calculation will be done, whatever the tax maximum. So actual investments proof also they'll ask in the month of March. Then maximum it will be deducted and it's in your form 16, it will be reflecting. Sir, it's iPhone, sir. It is for what? Please explain. So, see, in case of profit more than 3 lakhs, you will be losing the trust category and you will be taxed in under as a AOP. Your ITR 5 will be taken, then at marginal rate will be taxed. The next, non-occurring corpus. Then as per your accounting policy, I'll be debiting to my balance sheet. It doesn't come in my P&L, right? From there, one in liability side under reserves, the corpus fund will be there. Then next in asset side, the bank will be debited, right? As and when utilized, your from bank account, your it will be transferred to the fixed asset. Yes, that will be in the evening regarding notice. Education loan under old regime it is you have the deduction, but in new regime no deduction. Like what? Only for 20. What about ATG deduction? Oh, 26 QB. Sir, actually now it has been more simplified. Form 26 QB, where you're filing when there is a sale of property, right, where the sales consideration is more than 50 lakhs, that time TDS will be deducted. So once if you log into the income tax portal, okay, the purchase, who is payer is the buyer. From buyer's portal you need to log in. Under that you need to do the payment. Then in income tax you can file, sorry, in TDS website you can file the return. Then TDS is not required. Where the salary income is less than exemption limit, TDS is not required. So in evening on ITR 7 we'll be taking in detail. Okay, then in that attached exemptions will be explained. Sale value is 60 lakhs. Buyer are 3 members. Yes, they are the joint holders. TDS is deducted. You need to deduct TDS. So in your see, if you go for one member's login credential, there is a point that whether the seller or a buyer is more than 1%. 1%. Okay. If you put yes, okay, then they'll ask the another joint person. Bank. Yeah, 1 lakh. Equalization tax where the payable is more than 1 lakh, or more than 1 lakh, that time tax is applicable. So traces you can file, sir. TDS not filed the third quarter can file the third, fourth at a time with a late fees will be applicable. Once the due date has been over, the late fees will be applicable. You can file the return, but it will be showing as default, defect return. Okay, there online, whatever the actual late fees will be there, that you can pay and clear. After 2 days, it will be reflecting no defect, then pay the amount, then rectify it. Yes. Equalization levy. So, equalization in yesterday's PDF, I've shared about the equalization levy, where we are paying where the services are regarding online advertisements or any services which will be notified by the government. And that 6% if the payment is more than 1 lakh.
Madam, one question is here there in
Yes, sir.
between. No TDS deduction, whether to file nil TDS return.
If there is no TDS deduction, so it
It
is
is
not
not compulsory.
mandatory.
Mandatory.
Mandatory, but as a practice, we will file the nil return. It's quarterly one filing also. But it is not mandatory.
The cooperative society and temple having PAN should file IT returns.
Yes, sir, if they have ATG certificate. Otherwise, when they go for renewal, they'll ask the IT
In,
returns.
in my opinion, individuals or the HUF not having the income chargeable to tax, except those two, everybody has to file the return.
Yes, sir.
Everybody has to file, all entities, because they are all called entities, not as individual. So they are all required to file. Even there is a no income, nil return is also to be filed. Is compliance required for advance tax intimation? What is that?
So, like 2 days back, like everyone has received the intimation that to pay the advance tax.
Advance tax intimation.
Yes, sir. It is like file your IT return on or before due date. Like that, they have received the mail. Some of the clients, even for me, my clients also, they have received, sir.
Equalization, madam. Joint holder of property, but TDS deducted only on husband. Need to take whole income as husband. Joint holder of property, but TDS deducted only on husband.
See, 50-50% TDS will be deducted, sir.
TDS is to be made, but they are telling only husband has made a whether okay. That all subject to the how the officer allows or other. It all nowadays income tax has become like a lottery. If any scrutiny or any notice or any other markups happens, it's all purely depend on your pursuance. Otherwise, just it's only like a toll free. Okay, per day late fee. Lapse TDS amount can claim next year. Lapse TDS amount can claim next year. Is there any provision to claim the lapsed amounts of TDS to be claimed in the next year, madam?
Actually, see, if it has been shown as carry forward in our previous return, you can claim, sir.
In the respective year, you have to claim TDS amount can claim next year. Whether they are asking the question related to the deductor or the deductee, that's also PDF, madam, actually, yes, okay, that will be shared. Today, once evening, the session is over, entire material regarding this will also be placed in the Google Drive that you can download. Several notice issued. IT department 234F. Any solution? The 234F is actually of a discretion nature, sir. There is no compulsion. 234S should mandatorily be levied. It can also be nominally levied or it can be withdrawn by the officer. There is no compulsion. It's a discretionary. The officer has the discretionary powers. Nil return is sufficient. Cooperate. How to file? How to file nil return TDS? Sir, you can file nil return. Cooperative. Okay. Explain TDS late payment and late fee and interest. Then, sure, TDS will return but already filed TDS solution. Already filed TDS returns. 234G, I think that is. Okay. Not required, sir. Any period, if the TDS amount is not there, there is no need to file any TDS nil return for that quarter. It is applicable for OIDA or service provider, yes. On based on previous turnover. Companies report advance taxes. The time of payment of TDS, sale of property, seller plan is inappropriate. So purchaser get demand notice, payment 20% within 2 days. Seller can have any problem to debit. Definitely you can rectify it, sir. Correct, no, madam? One question is there, madam. At the time of payment of TDS on sale of property, the
Yes.
seller's pawn is inappropriate. So purchaser get a demand notice for payment of 20%. Within 2 days, seller pawn active. Now any provision to levy demand.
No, but before sale, you need to check.
No,
Okay,
that's what I
seller.
say they are telling. It is inappropriate.
No, then we need to appeal, no, sir, regarding that
You have to file a petition. You have to give all the
petition.
details. So it is all subject to further persuasion. 13.3, 14.3 not received. Okay, that you will get it, sir. Don't worry. Carried forward, updated return. Yes, if carried forward, can be claimed under unclaimed TDS subsequent year. Can we get all material? Yes, definitely all material you will get. Sir, show on tax and CTP books. How you can straight away book an order to taxman. If you want virtual books, they will give virtual books. Okay, if you want hard copies, they will also send hard copies. But I recommend you wait for 5-6 days if you are registered. You are getting free online books from the university. There is no need of purchasing those books because those books are pertain to 21-22 only. Further, it is not updated by taxman. Okay. If you willing to prices can file in better. There should be. What? Trust registered 12A. More than 3 lakh surplus. Is it tax liability? Surplus. Madam?
Sir, yes, sir. Since maximum 25%, up to 25%, I can do the business, right? To sustain the
What
trust.
they are telling, what Malage sir is telling is, 12A, if more than 3 lakhs surplus is the tax liability. Whether the surplus can be treated as tax liability. 25% of your income may be
Business.
from business, but even though, what about the surplus?
Sir, but if I have a 12A registration, sir,
Huh.
that time that limit does not apply, no, sir.
Acha. They are asking for that, especially only for surplus they are asking.
Surplus. Then 12A registration will not be applicable. If you are doing the
Yes,
business
yes,
more than 25%, then
yes.
under
You are
ITR
not a
5.
charitable, you are not a charitable institution.
Yes, yes, sir.
If TDS notice fee paid, then again, is it compulsory to upload the tax paid challan in TDS portal? Not necessary. Once you paid, automatically that will get updated. For 2 days, no problem. When correct, 26 QB. Nothing for received. Trust particular financial year, I have spent only 70% and not 85%. So what is the condition for filing? Madam, they have
Yes, sir.
spent 70% and not 85% as stipulated under the Act. They can carry it forward it to the for next year and they can do it. No, they have to prove it.
That they have to prove it, sir.
Is there any mock? That will be, sir, it is under process. If you give some time, definitely a mock will also be given. Now, for the time being, a mock is very much available in the institute's website by Pearson. You can always have it freely. Free 4 topics mock is already placed in the website existing. What are the terms and conditions IT filing eligible time limit for ATG? That we will take it up in a different modes of ATG, totally all. Sir, I have applied totally and got 10 AD. Madam, they have
Yes, sir.
applied for totally A, got 10 AD. I think that combined form 1023AC, 1023C and all both are together, put together, that will be a single uniform form, no, the 10 AD.
Yes, sir.
10 AD is a unified form wherein all the provisions will be mentioned in that one. You just check once whether your this is there or not. 10 AD is a combined form that will be generally given to all. The surplus 25% will be taxable. Surplus 25% will be taxable. Okay. Only the 25% will be taxable. But we are worried about if the 25% and above is your income, then you may also lose the status of tolli also, no? That also we have to till the date not taken tolli and ATG trust since 25 years old temple trust. Sir, there is no problem. If you don't take tolli or ATG, okay, you cannot claim that deduction at all. So you are paying the tax or you might have the income below the limit. So ATG is applicable only for those people, okay, who pays and get the exemption. And for you, it's not an income. It's a donation to prove that one. Okay, and 12A is purely for you to treat your income. So if you don't have that claims, absolutely no problem. There is no compulsion. You have to take 12A, you have to take ATG. You are offering it to the income, nothing will be. Medhavi username, Gmail password. Error. Sir, that error is that LMS, that is you have to type L, that is not I. Kasturi Rangan, sir. LMS. You type it LMS. Many people are trying it as IMS. Old student, please type password demo. Correct. Old students has to type demo. Only those who registered in this year, they have to take LMS. How to register to Medhavi to appear exam, that we will let you know, sir. Don't worry, we will give a notification very shortly. TDS 194 IA deducted and paid on purchase of property, but land registration cancelled. What to do, madam? Land registration cancelled means the party who has taken from him, you have to recover the money, and the money which is deposited there, he has to claim the refund.
Yes, sir.
Simplest solution. Because there is no criteria to claim back it.
Yes. Yes.
You have to prove the transaction is cancelled. And you have to recover from whom actually the transaction is. Then automatically it is his area and he will claim the refund. The website of Mark, the separate registration need in Medhavi. That we will let you know now. Any people who have joined from RPL, don't visit Medhavi Skill University for registration. Just only use LMS if activated. Other things will be taken up. Kasturi Rangan sir, that L is to be typed in small caps. Okay, not big. Okay, 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 okay. That all will make, okay. Okay, while putting, okay, Medhavi, yes. Okay, okay, okay. Okay, Madam Ji. If TDS required and deduct even income offer under, but is it TDS required to deduct even income offered under 44 AD cases? Sir, 44 AD cases, some of the provisions are not applicable and some of the provisions are mandatory even if you are a normal assessee. That you have to check. Okay, TDS, certain provisions of TDS. For rent and other things, there is certain provisions, lump sum. But for regular 44 AB, certain provisions, you have to check. At the time of property purchasing, purchaser not linked with Aadhaar, but registration of pawn done. Shall we pay TDS for seller? Sir, seller and purchaser, that beneficiary and the seller both should be different. No, how you can file it from? The transaction should be reflected in the buyer's account. Okay. Online trading completion certificate will be issued. What is this, madam? Online trading completion certificate. Is it related to shares?
Yes. Yes, sir.
Okay, okay, okay.
But
That you apply with your what intermediary. They will give you transaction statement, holding statement, and profit and loss statement. You can claim that certificates from them. A regular group student, CA, we write exam. This regular group student can write. Okay, you can write, sir. Regular rooted student. If you are joined in the last year and you have completed internal assessments and you have attended the training, okay, then you can. Minimum 6 months is required for regular students. All sessions. Okay. Not, you can, now you can make the corrections. It is allowed. Aadhaar linked sale house TDS 20% notice number 1. Aadhaar not linked sale of house TDS 20% notice from department. That all you have to explain, sir. You have to explain, and if any anomaly is there, now you can ratify it. Okay. Now you can ratify it, not an issue. Notices are there. Definitely notices will be issued. Shekhar Babu. Okay, Madam Ji. We will meet
yes,
in the evening. So, happy day one and all. Thank you. Thank you.
thank you, sir.
Krishna Prasad. Shall we start?
Yes, sir.
Okay, welcome, madam. You can start.
So in this session, we'll be learning about assessments and those procedures. Yes. So usually CBTT has two wings, three wings. Another is appeal wing. Okay. First is assessment wing and investigation wing. So in this hierarchy, the case will move above. So first initial is my income tax officer or inspector. Then above him ACDC. Above him additional CIT or joint commissioner. The next is principal CIT or commissioner of IT. The final is under assessment wing is principal chief commissioner, principal commissioner of IT. Whereas in investment wing, this principal director general of IT or director general of IT. The power, okay, the power to assessing officer will be at limited. Okay, then as the hierarchy goes, there will be a power, unlimited power. CBDT, then it is controlled by, governed by CBDT. Then the jurisdiction of the assessing officer, once the jurisdiction of an area is allotted to an AO, then within that limit, he can exercise his jurisdiction over any person who is carrying on the business or profession in that area, or who has principal places of his business or profession in that area, or who resides in that area. In case of dispute over jurisdiction of office shall refer to a higher authority. Assessee can challenge the jurisdiction of the assessing officer within the following limit. One second. So it can be questioned by the assessee. So in that two conditions, sorry, where if a return of income is filed under section 139(1), that is on or before the due date, in that case, 1 month from the date of receipt of notice or before the completion of assessment, whichever is earlier. Whereas if assessee has not filed the returns, so we are within a limit of allowed in notice 142(1) or 148, where the returns are the notice is furnished to the assessee to file the return, or the judgment is given in that case, or within the limit allowed in in show cause notice under section 144 to show a cause whichever is earlier. Okay, so now the assessing officer, the AO, where my business and profession is there, who has a principal place of his business of profession in that area, who resides in that area, which all income comes where the notice can be served, who resides in that area. Which income? See, where my business is carried on, where I'm registered, that will be for my business and profession. How can they serve a notice, or a AO can issue a notice where I reside? Because my AO, my LVO, I mean department, that jurisdiction will be different, right, from home, if they are both different. Case when I have HP, salary, yes, other than, Yeah, business place will get the notice, but your if whose resides is that area means if I have a rental income or salary income or capital gain other than business income, in that case, assessee can serve the notice. Which are so assessing officer. So in which jurisdiction limit his residence house is there, in that limit that officer can serve the notice. So rights to challenge the jurisdiction. So section 124(3) provides that in cases where search is initiated under section 132 or books of accounts, other documents or any assets are requisitioned under section 132A. No person shall be entitled to call into a question the jurisdiction of an assessing officer after the expiry of 1 month from the date on which he was served within the notice under section 153A or section 153(2) or after completion of the assessments. Okay, under four circumstances, the assessing officer's jurisdiction cannot be questioned. That is in the case of search. Okay, so can you give me the example? Four circumstances. Your asset is requisitionist, or the gold jewelries which were identified or got in someone else's place, or your books of accounts and other documents were got in someone else's place. In that cases, the assessee cannot question the jurisdiction of assessing officer. Then, power to transfer cases. So, assessing officer can transfer the case if within the same floor or different officer, if they are within the same premises, whereas from one assessing officer to different, where one person will be very technically expertise in capital gain calculation, in that case he can transfer the cases. The if he what it can be one if he is from different areas, area wise. So in such case, he should give an opportunity to be heard. An assessee should be given an opportunity to be heard before transferring such case. Okay. CIT or CCIT can transfer cases from AO to another AO subordinate to him after given an reasonable opportunity of being heard on concerned assessee. However, no opportunity of being heard shall be required if the case is to be transferred from one AO to another AO within the same city, town, locality. Dispute regarding jurisdiction shall be resolved by the concerned CCIT or CIT on mutual understanding. However, for any disagreement, the matter shall be referred to CBDT, and CBDT shall resolve the disputes by way of issuing a notification in an official Gazette of India. Okay. So, change of an incumbent of an officer. So, when the tax IT person can change states from which the succeeding income tax authority would continue. In case where an income tax authority succeeds another income tax authority who ceases to exercise jurisdiction, when the succeeding income tax authority may continue the proceedings from the stage at which the proceedings was left by his predecessor. Opportunity to be heard. The assessee concerned may demand that before continuance of proceedings, the previous proceedings or any part thereof be reopened or reheard before passing in any assessment orders against him. So, like cases where the AO can meet with death, right? or some accidents had happened to the AO. In such case, the case can be transferred from one AO to another AO. Okay, in that another AO, we cannot question the jurisdiction. Second, in this wish, he may continue the proceedings before without re-hearing the whatever the before previous stages. Whereas he have to give the assessee may demand the opportunity to be reheard, where he can reopen the case, because in case without hearing or the or investigating the facts and evidence, he may give a wrong judgment, wrong order can be passed. In that case, the opportunity can be given to be reheard. Okay, when the case passed from one AO to another AO. The next, power of IT authority is equal to my civil process, civil court. Civil court powers. First, IT authority, discovery and inspection. They can discover an inspection based on your returns or documents or information available, enforcing the attendance of any person, including any officer of banking company, and examining him on oath. So he can call any person, okay, for the for evidence, even a banking person, compelling the production of books of accounts and documents, issuing commission summons. The summons can be issued unless he has not replied for the notice. The power can be exercised even no proceedings with respect of such as person pending before him on any other income tax authority survey. Okay. Income tax authority is not allowed below the rank of AC notified by board shall have powers under 131(1). Means your what inspectors, that is your inspectors, right? Then making an inquiry or investigation in respect of any person in relation to DTAA or the TIEA tribunal, even if no proceedings is pending against such person before the income tax. Okay, the income tax authority or DRP are empowered to impound or retain it in their custody any books of accounts or documents produced to them. Then the power to call information firm means their partners, name and address of their partners and firm and their partners, HUF, name and members and manager, karta and their members, trustee, custodian or agent, where person who is whom he is the trust or is a trustee, guardian, agent of their addresses. Similarly, any person who has taken the responsibility, okay, if it is an agent dealer will be called upon, whereas assessee, an assessee, if he is a salary holder, the particular person, individual will be called upon. Any person, including banking company or any officer thereof, information in relation to such points of matters or statements of accounts and affairs verified in manner specified, giving information in relation to such points or matters which will be useful for relevant to any inquiry or proceedings. So basically, until up to ACDC, they will have the powers. So still, yeah, right? Up to here. So they will have the powers of civil code, where they can call for discovery or inspection of books of accounts or invest or inquire any person on oath. Yes, discovery and inspection, enforce and attendance, compulsory attendance for like banking officials, and to examine on oath or compelling the production of books of accounts or issuing the commission summons. Power to call information. IT authority may enter at any place at which the profession is carried on and collect the information from there. IT authority may enter at any business premises or profession referred above only during the working hours. At, at which place at which place is open for business operation. However, the IT authority cannot remove or cause to be removed from the place where he has entered any cash, stock, or other valuable items. Okay, only for information. Okay, so one example, an hotel manager was caught in night with cash of 10 lakhs. So during what checking, the hotel manager was caught with cash. Can the what can IT person what ask for the informations or enter the premises? It's a lodging in hotel. Yes, as it is. Oh, lodging. It is 24/7 working hours. They have not told you sunset, sunrise. That comes in my survey, right? Sorry, inspection. Here, working hours. Call for information. He was carrying 10 lakhs amount. Cash example. During the working hours of the business. Okay. If I say, if it is a just restaurant. What about restaurant? Which is open only in day and evening. Yes, before 10, not possible. Yes, only during working hours. Okay. 133. Power to call in information by prescribed IT authority. It's in investigation wing. Okay, 1 second. Yes. The IT authority, for the purpose of verification of information in its possession relating to any person, issue a notice to such person requiring him to furnish information and documents, utilize such information and documents in accordance with the scheme notified under the scheme or provision under section 135A. This power can be exercised even if no proceedings are pending. So, right to verification of investigation. Okay, the CBDT may make a scheme for centralized insurance of notice for processing the information or documents under this section. Scheme of the section is not applicable from the date of such notified. So, and when the faceless scheme came into effective, that is from 21, this scheme is not effective. But the investigation wing, if they feel so, they may call for verification of accounts information. Power to survey. Okay, in this case, notwithstanding anything contained in any other provision of income tax, an IT authority may enter building or place at which business, profession, or activity of charitable trust. So previously, they had just a business or profession. You may enter business, profession, or residence. Okay. So once there was a rape in a charitable, what charitable organization. In that case, They questioned that as here there is no business activity conducted. Why there is a search or survey? So the law was amended. So they have done the inclusion of charitable purpose is carried out and requires any, okay, that time this point has been included. So the IT authority may enter any building or place where business of profession or activity of charitable purpose carried on and require any proprietor, trustee, employee or any other persons though. So what all they have to provide affording the necessary facility or to inspect such books of accounts or documents, afford him the necessary facility to check and verify the cash stock and other valuable articles kept, furnish such information he may require as he may require. If books of accounts or assets relating to business, profession, or charitable trust are kept at some other place, then such other place shall also be covered under survey. So, in survey, entry restriction is the entry to the place of business or profession can be only during those hours during such place kept open for conducting business or profession, that is during business hours. Entry to any other place can be only after sunrise but not before sunset. Restriction is only for sunrise but not sunset. Next, income tax authority acting under this section may place a marks or mark identifications in books of accounts, make an inventory of an cash, stock and other valuable articles, inform books of accounts, records, record the statement of any person, and maximum he can take into custody is 15 days. The IT authority is of the opinion that it is necessary to do survey at any function, ceremony, or even then they can survey such place, but only after conclusion of such function, ceremony, or event, and the required statement given by such person can be recorded. If the person do not cooperate with the survey, the summons can be issued. Clear? Powers. Yeah, trust activities. See, I have a trust, but there I'm converting black into white and white into black money since it's exempt. Example, I'm saying I'm doing some illegal business there. In such case, should enter the premises, right? Or showing my income more than 50. I have the business, what business activity under trust activity. As per rules, it should be less than 25. But there is more of business activity, more than 25%. But I'm what modifying or fabricating my books of accounts. Such case, they may search, right? Search, take survey, and review with my books of accounts. Charitable trust, then it was added, right? My powers to CBDT and principal CIT, they have the power equivalent to civil court judges. So next, at a glance, so first initially I started a business. So when I didn't have any income, I was not supposed to pay any tax. So then is that mandatory to file the IT returns? No, right? No. Then I got an idea that I want to start my business. Okay. Then I started my business. I had a profit, good business. Then I voluntarily, why to get future dispute, I started voluntarily paid my taxes. Such case, it is called self-assessment under section 140. I paid voluntary tax. Clear, sir? Clear. So if there is a 100% intimation, self-declaration, that is, yes, I made a self-declaration. See, this is my profit, such and such. Please, then file my IT returns, right? Next, um, on a general basis, I had received a notice that please agree or disagree whether the what income declared by you is true, right? If you agree, and if the assessing officer also agrees, then the matter is closed. Then, if there is some what manipulations or something, I got scared, then I'll disagree and file my revised return. Then that was a chance given voluntary basis to file the return. Second, if assessing officer feels that some informations are suppressed, so he may pass an what you say, yeah, he may communicate, right? So that when what he can pass a notice. Yes, yes or no. The notice can be issued. Yes, no notice can be issued. So summary, after summary assessment, he can issue a notice. So that notice should be issued within 3 months within 9 months from the date of filing the, sorry, from the end of your financial year. Okay. Sorry, that is 3 months from the end of financial year in which the return is filed. The notice should be issued within 3 months. That he feels that there is an state of income. Clear? Now notice is received. So he'll give another opportunity. See, now you have received a notice. So please file the revised return. Either you file the correct picture, or if he say no, everything is correct, then he may ask to produce books of accounts, right? Else, he may ask to get audit done. Even though if your books are audited under the any chartered accountant, if you are under the tax audit also, books can be audited. Yes, can the books can be audited? Yes, books can be audited under section 142 2A. Then, if on this basis there will be an opportunity to be heard. After that, if they find any materialistic evidence, opportunity can be reheard. So the next demand will be raised, right? After conclusion. Else, okay, if he is not providing any information, the assessing officer feels that there may be some what revenue which is evaded. Such case, he can file a best judgment order, he can give, right? Next, now assessee is aggrieved from the judgment. Next, he can go for either rectification, revision, right? Rectification and revision he can go, right? Or appeal to higher authority. Then higher authority will be your commissioner, right? Commissioner appeals. Yes, clear with this. Yeah, see, when the financials are prepared by your auditor, they assessing officer, when your company is very huge company, so assessing officer will have a limited time, either 6 months, 9 months, to complete within a limited time. So you have a huge business expansion all over the India. Such case, they can appoint a CA, okay, to audit the books. Or you're in example a e-commerce business, say or e-commerce operator you are. So that is a new subject to me. I was in something business where what I was an officer for business, what trade business, service business, but e-commerce is a newer topic. Or software business, where software is not seen. How to audit the stock? How trademarks? So trademark goodwills or the contracts, right? So he may appoint a CA who is specialized in that area. Yes, this is a assessment in a glance. The next, see, assessment can be filed under only two cases. The rest all are the powers which are given to facilitate the assessment. So summary assessment. So summary assessment today 100% summary notice, I mean not notice, intimation is given to all the assessees to their registered mail IDs, right? So they ask when you have a refund of income tax. In that case, you need to provide your consent before accepting the refund. So in few cases they feel, so if example refund is less than 10,000, immediate refund will be given. For them, in those cases, they as a, what they won't get the message that to accept or agree for the refund or IT returns which are given, which are filed as true or fair. But whereas there is a huge refund, erroneous refund, the assessing officer may stop, may hold, and then the pop-up message comes in our IT new portal, right? In that tab, work list you will have whether you accept or whether you agree with the refund or disagree, partial or fully. Then, if you disagree, you can file a revised return. If you agree, then next you may have a following notices or the refund may be issued. The next self-assessment tax, similar, calculate your total income, tax liability, pay to the government. Whatever the interest are there, pay. That's it. If the assessee shall be liable to pay such tax with interest and fee when the amount paid by the assessee falls short of aggregate of the tax amount so paid. The first be adjusted towards the fee, thereafter the interest. Payable as aforesaid, the balance, if any, will be adjusted towards the payables. Consequence of pay tax, interest or fees, assessee shall be deemed to be assessee in default. And interest in payable, improper IT returns. If you edit your IT return, which is auto-calculated, so if you delete any interest or fees, the next you will be receiving a notice as improper returns. Will rectify the returns or the return will be defective returns. Summary assessment 143.1. So I'll get an intimation, then my assessment will be taken place. This is a computer based. Everything is 100% automated. Okay. Where the return has been made under section 139 or in response of notice of 142.1. So after your due date, if you have not filed the return, you will be receiving a notice, right? File your returns within 30 days, 60 days. A total income of loss shall be computed after the following adjustments. That is, arithmetical error, any mistake, disallowance of loss if return of income filed after due date. So if you have a business loss and so previous year also you have filed after due date, to this year also you have entered the amount, loss amount. In that case, they can disallow the amount. Disallowance of expenditure or increase in income indicated in audit report by special audit. Incorrect claim. Your Form 16 shows one amount, but you have filed one amount. Where, example, Form 16 shows HRA. Then again you are claiming under ADG. Right? In that case, incorrect claim. They may call for what summary assessment, right? Next, disallowance of deductions under Section 10 AAA 80 HH 80 RRB Chapter 6 disallowances. Okay, these are the 5 types where automatic the intimation will be given, assessment takes place. So provided no such adjustment shall be made unless intimation is given to the assessee of the adjustments either in writing or in electronic media, in electronic mode, provided further that response received from the assessee, if any, shall be considered before making any adjustment, and in case where no response is received within 30 days, no response is received within 30 days, then the adjustment can be made. Yes, yes or no, sir? So within 30 days, you need to file. So when you have one refund case in that within 30 days. Next, the tax, interest, and fee, if any, shall be computed on the basis of total income computed under clause A. So previously we showed. So that amount payable refund loss declared on amount of payable refund, no adjustment shall be made, okay, unless you respond to the notice from your portal, no adjustment can be made. Intimation shall be sent from the time limit of 9 months from the end of your financial year in which return is filed. Means that is you have filed your GST, sorry, income tax return for the financial year 22-23. But 22-23, 31st of July. So 9 months from 1st April, that will be 31st December 23. Okay. If then acknowledgement will be my deemed intimation. So sometimes in my summary assessment, whatever the income computed as per the assessee, income computed as per department will be same. So there is no further actions to be taken. It is seen as deemed acknowledgement where assessing officer for the purpose of making assessment has issued notice under section 143(2) as a reason that grant of refund is adversely affect the revenue. Then with previous approval of PCIT, it can be withheld. The refund can be withheld. And they asked in the portal in faceless today whether do you agree with the refund? Yeah, adjustment. If your any pending demand is what is in your portal, so, okay, and you have received a refund in this current year, the automatic adjustment will be done. There is no objection or what I guess grievance drop down will be there. No, last there you need to file. Okay, regarding this adjustment. So remedies. So for summary assessment, so as summary assessment, as sir had told that adjustment towards my refund. So need to check what is the demand for which year the demand they have set off with the refund. Or you can appeal to CIT appeals, Commissioner of Income Tax appeals. Or revision by CIT is not allowed. There is no revision of the intimation. Since it's an intimation, not an order. So intimation is given by the system, automated, whereas order is given by human assessing officer. Rectification, or you can file for rectification. So either you can do an appeal if what if your refund is more huge, or you can file for rectification under section 154. So adjustment issued, but how to file objection? So you should file for rectification. Then special audit, where the assessing officer feels there is some evasion of income. Such case, like as in GST and customs, they call for a special audit, right? Similar case in income tax also, the assessing officer can what give or appoint an auditor to what to audit the particular what unit or a company where the case is nature and complexity of accounts, where I will be following Ind AS, IFRS, or any such for different units. So my IT returns, sorry, my IT return is like what clubbed with many other items. So in that, if I'm not expertise, I can hire from outside. Volume of accounts. If in case of manufacturing companies, example, doubt about the correctness of the accounts and the multiplicity of transactions. If a same transaction has occurred similar way many a times. So if I'm withdrawing the cash of 5 lakhs every month, same day, there will be a cash transaction, right? So it's reflecting in my annual information statement. On that cases also may call wide purpose. Specialized nature of business activities, nature of revenue, and previous approval of PCIT, Principal Commissioner PCIT is required. So wherever they audit, so after your summary assessment, if you are going for regular assessments, so in such cases, prior approval of PCIT. So above your ACDC, okay. So in you should take a prior approval and issue a notice. Clear special audit. So note, it will be done by an CA. The maximum days are 180 days. And before issuing an notice, okay, on order for an conduct of an special audit, in such case, assessee to be must be given an opportunity of being heard. And directions can be given only when the case is pending. If they have any such scrutiny cases or previous year's cases pending against any particular assessing officer or a court, such case, it can be given a direction. CA is nominated by PCCIT. Direction can be given even if accounts are audited. Even if you are under the tax audit also, the special audit can be conducted from the department side. If you are not cooperating or you are not providing any information to the auditor or non-compliances, in such case penalty can be levied up to 10,000. Then valuation. Where I had made a sale of one property. So where the property value was 100 lakhs, but I'm showing off 80 lakhs. When I've received 80 lakhs in bank, cash I've received different. But because that revenue, the fair market value was 100 lakhs, but you have showed at lower price. Then what cost of acquiring, cost of acquisition or improvement, I'm showing more. So I'll say one. So here it is as per them it is 80 lakhs, but I'm showing 120 lakhs. Something. Such cases they may ask for valuation of officer to value the estimates. Okay. AO may for the purpose of assessment or reassessment. Okay, once the assessment has done, again the case can be reopened up to 4 years. May make a reference to valuation officer to estimate the value, including fair market value of any asset, property or investments, and submit the report to him within the period of 6 months, from the end of the month in which the reference is made. While counting the period of completion of assessment, the time limit for making reference to AO is excluded. Clear with this? So one special audit, two options. After my initial summary assessment, either I can go for special audit, or if any capital gains computation is given, in such cases, I can ask for a valuation officer. So that time limit is not given. But to submit the report is, the period is 6 months. Next, inquiry. Inquiry before assessment. So inquiry means only where you are asking the assessee to provide the books. So you are making an inquiry. There is no investigation or what. There is no investigation or verification or auditing, where if you have filed the returns, you shall require the assessee to file our return of income. So again, you may ask, so whether this return is correct. First summary assessment, you will have a message in your working list whether whatever the returns you have filed is true. If you agree, does not agree, partially agree. If you does not agree, revise return, right? It's an option 142(1). Okay, inquiry. Require the assessee to file return of income in prescribed time and manner. Please file within 30 days. If you does not agree, file within 30 days. The return of income so filed shall be deemed to be filed under section 139. So initially I showed 10 lakhs loss. So after the notice or inquiry from AO, then I'll be filing where I'm showing 5 lakhs loss. Or same 15 lakhs, it has increased to 15 lakhs. Okay, it will be deemed to be filed under section 139. Providing the information to produce or cause to be produced such accounts or documents as the AO may require, or including the statement of asset and liability, not more than 3 years. 3 years prior to your previous year. They may call for an information, but not more than 3 years. So before calling for any information, you should have a prior approval of JC is required if details of all the assets and liabilities are required, which are not included in your books. Clear? So here the notice to issue, they don't have any limit. But before the notice should be issued before the completion of any assessment. Clear? So where my assessment is at something where I filed for rectification or revisionary of order, such case also notice can be issued. So can give another opportunity for another assessee to file the returns, but it is before the completion of the final assessment. Yes. Show cause notice, show the cause, reason. Where return of income is filed under section 139, 142 or AO or prescribed ITA, not below ITA, okay, income tax authority shall ensure that assessee has not understated his income or overstated his loss, depreciation, underpaid the tax. The limit is 3 months from the end of financial year to be served, in which return of income is filed. Okay, so for financial year 22-23, I have filed in for financial year 22-23. I have filed in 23-24. So my limit will be up to June 24. So up to June 24, you will have a limit to issue a showcase notice. So first, under section 142, they will issue the notice, right? And a summary up to 9 months. Up to 9 months from the end of financial year. After that, they'll issue regular assessment notice, then notice of showcase notice. Non-compliance, when you're not producing or not providing any sufficient information, best judgment assessment can be, or the order can be issued under best judgment order or penalty under section 274 1 of 10,000. Soon the scrutiny assessment on the day specified in the notice issued 143(2) showcase notice, as soon as may be after hearing and evidence as a assessee may produce such other evidence as AO may require on specified points and making after taking into account all the relevant material which he has gathered, the AO shall by an order in writing make an assessment of the total income or loss of the assessee and determine the sum payable by him or refund of the amount, okay, which are the he may provide for research and associations or any income which is exempted incomes like associations, institutes, new agencies, fund institutions, etc. But before giving any assessment or any notice to them, the AO should intimate to the government the contravention of above section and the approval granted to them has been cancelled. The order can be passed within the time limit of 143(1), but before the expiry of 9 months. 9 months from the end of assessment year in which the income was first assessable. So my charitable trust, sir, stands cancelled. So I had a charitable donation, 10 lakhs, 10 lakhs, but business income of say 5 lakhs. Such case, what an assessing officer can do. Exempt income, right? It's totally exempt. But as per the act, 25%, yes, noticed, he made, communicate to the central government, and the notice gets and the exemption gets cancelled, then you'll be filing under general, under section, under ITR 5, right? As AOP, Association of Person. Under the 142(1), they'll serve a notice to file the return. And remedies, appeal, revision, and rectification is allowed. Since regular assessment is an order, not an intimation. It's an order, not an intimation. Revision is allowed. Rectification only the cases where there is a mistake. Best judgment. The cases best judgment. So when you have filed the returns 139 or your lost returns or any other fails to comply with the terms of the notice. Notice I told that to file the return, but you didn't file. Fails to get special audit. So I felt that there was an understatement of income, but what the audit you didn't give the sufficient information to the auditor. You were not giving any sufficient documents. Fails to comply with the terms of the notice of 143(2) regular assessment notice. In these cases, mandatory best judgment or order will be issued. Optional. Accounts are incorrect. Accounts are incomplete where no method of accounting has been regularly employed of the assessee or ICDS is followed. Such case optional, but best judgment can be given after the inquiry. Not accepted any deduction. Means I didn't get you, sir. Best judgment can be given when you're not complying or you're not cooperating with the auditor or sort of working or providing a sufficient information. Such case, best judgment is applicable. So, reassessment or income escape. So, you feel that there is an what escape of income. So can the assessing officer immediately give a notice that provide your books of accounts for last 2 years? Can he? No. Yes. So after amendment, so 148A is applicable where there is an opportunity of being heard. So before taking a reassessment or income escape assessment, such cases, the opportunity of being heard to be given or a normal notice or intimation where you should call an assessee and ask these are the doubts or the data which is required. When he is not complying, then you can issue a notice for a reassessment. Then before providing the approval of the notice should be given. Approval should be taken not before below the ACDC. Okay, it is by specified authorities. So the income escaping assessment in any income chargeable to tax in case of any assessee has escaped assessment for any assessment year, the AO may subject to the provision from 148 to 153 assess or reassess such income or recompute the loss or depreciations allowance or any other allowance or deduction for such assessment year for their purpose of assessment or reassessment recomputation under this section. The assessing officer may reassess the income in respect of any issue which has escaped the return, and such issue comes into notice subsequently in the course of proceedings under this section, irrespective of the fact that provision of this section 148A have not complied. So my first, before reopening the old assessment year's case, you should give an opportunity of being heard to the assessee. Else what the notice which is given will be void. But in certain cases, my four cases are such where previously search had taken place, where books of accounts of your of the assessee had found in some other person place gold jewelry, unaccounted gold jewelry found, right? Requisition of asset has been done. In these cases, opportunity of being heard is not given as per section 148A. So here the process is that, yes, before making an assessment, reassessment or computation, okay, the assessing officer shall serve a notice for copy of along with copy of order passed if under the section 148A. So will serve a notice. Please come to the department or faceless provide the informations required requiring him to furnish within such period given whatever 30 days, 2 months, what 30 days to 7 months example. Okay, period given in a notice. A return of his income or clubbed income, minor income. I'm not disclosing, but I'm investing every month. Okay, from her account to for the investments. So the income of the minor should be charged to the guardian, right? In such cases, during the previous corresponding to the reassessment year and provision of this act shall so far as may be applied accordingly, as if such returns were a return required to be furnished under section 139, provide that no notice under this section shall be given if information with the assessing officer which suggests that income chargeable to tax has been escaped. Okay. Example, minor income. Minor, I'm transferring certain sum of money to the minor. From her account, I have invested. Where the investment has done and there is a return like dividend, interest, but I've not charged. Either I've not shown in my IT return. It's it's simple and evasion of tax. So notice before assessment. So which cases you can give? Other than the search survey requisition, you can give in the following cases the information flagged in the case of assessee. Means since minor cannot be operate, minor cannot operate the bank account. Guardian will be given the authorization to operate the bank account. His PAN will be attached. Example, when you are making an Aadhaar card to your child, the what your thumb impressions will be given of parents, not the child, because child's every 5 years the thumb impression will be changed. Right? There is a tracking. Your PAN and Aadhaar is linked, and via Aadhaar card you are given the Aadhaar card to your minor child, right? There, then have a list transaction that such investment is done from the minor account. In such case, there is the information flagged in the case of the assessee of relevant assessment year in accordance with the risk management strategy or any final objections raised by the CAG Commissioner of India to the effect that the assessment in the case of the assessee for the relevant assessment year is not made in accordance with the provisions of the Act. Then next, in case of such survey requisition, there so it's an from Finance Bill 21. Okay, that is it is effective from 1st April. There is no required to give an into opportunity of being heard where search has been initiated or requisition of the what furnished assets or jewelries or books of accounts found in some other place. But AO should be satisfied before giving a notice. AO with a prior approval of PCIT, they can give a notice. Opportunity of being heard can be given in all the cases except of 4 cases. Then produce before issue of notice for 148A. So, so first conducting an inquiry. So conducting because I suspect that the minor income is not clubbed with mother or father. Both they are not sure. So I'll ask the father who has given his PAN, right? Then approval of specified authority. Then grant of opportunity of being heard. So opportunity of being heard be given with the prior approval of specified authority by serving a show cause notice within the time as may be prescribed in notice, being not less than 7 days and not exceeding these 30 days from the date on which the notice is issued. So, if the AO is the assessee has replied, okay, if he is satisfied, then no further what orders will be passed. Then, but if he is not satisfied, assessing officer can order AO shall decide on the basis of material available on the record, including the reply of the assessee, whether or not it is fit case to issue a notice under section 148 by passing an order with prior approval of specified authority within 1 month. Clear? So other than four items, so you can call for being opportunity of being heard can be given. So time limit in general, no notice shall be issued after 3 years have lapsed the end of relevant assessment year. So for my financial year 22-23, assessment year is 23-24. From there 24, 24, 25, 26. Last. So after 26, he can't issue the notice. Where before assessee has evidence in his position which reveals that income escaping assessment represents in the form of asset amount or likely the amount of 50 lakhs or more. So your previous four items, search, goal, requisition, such cases, he may issue the notice beyond 3 years, so up to 10 years. 10, 10 years from the relevant assessment year. And there is no time limit to issue the notice under section 148 where the issue is standing in front of ITAT, High Court and Supreme Court. Notwithstanding anything contained in section 149, time limit, the notice under section 148 may be issued at any time. Okay, until the final assessment is given. Okay, for the purpose of making assessment or reassessment in consequences of or order to give effect to the findings of the directions. So that is the order under section 250 IT80, then High Court and High Court order, High Court and Supreme Court order, then CIT. So when the case is still pending in front of ITAT, so High Court, Supreme Court, in that case there is no time limit to issue the notice. So so normal assessee 3 years time limit to issue. If then other than them, like you had previously a search or your books were found in some other place or requisitioned asset. So in these cases, the time limit is 10 years from the end of relevant assessment year. So the faceless assessment came to give an efficiency, transparency, and accountability. So before what they used to call the assessing officer, everything used to see the assessee as he has escaped the income, right? Whereas assessee used to see that he needs something, so he had issued a notice. So to avoid that, and even a jurisdiction, okay. So in that case, the assessing officer can be even in Delhi. He can assess the income of the person who is in Bangalore. Right? Faceless assessment. If the assessee is not filed, deemed to be filed, if it deemed to be filed and issue a notice under section 142, you are not complying. So that 142, it is saying that file the returns. You are not filing. Best judgment, then demand recovery based on the annual information report, what it is reflecting, can write. They may attack your bank account first. So you can't do any transactions. Okay. To eliminate interface between income tax authority and assessee or other person to the extent technological, feasible, optimistic utilization of resources scale and functional specialization. So the person who is in Mumbai is very good in calculating the business or speculative business or any other like e-commerce business. So in Bangalore, you don't have that specialized AO. Such case, the case can be transferred in faceless assessments, introduce team-based assessment, reassessment, recomputation, or issuance of sanctions notice with dynamic jurisdiction. The CG may make scheme for the purpose of issuing the notices under section 142, 1, 2, 2A, 2A, okay, as part of greater efficiency, transparency. Clear? So still any doubts? Yes. So shall we have a break? 10
Yes,
minutes?
ma'am.
Yes, sir.
Definitely, definitely. Krishna Prasad?
You can find one. There's a notice, right? So 142, where the assessing officer feels that there is an escape of income, right? Under that section, he may issue the notice 142.1 to file the returns. No, 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 no. See, 148 is different. That is for reassessment. 148 is given for reassessment. Notice for reassessment, that condition is four, except from four conditions, they may issue a notice with a time period of 3 years from the end of relevant assessment year. Okay, if they feel that this books needs to be some material fact has been not taken into consideration, in that case, 148 can be given. Only first reasonable opportunity of being heard to be given to the assessee. Next, sorry, first prior approval of specified authority, then the opportunity of being heard should be given to the assessee. Then you can issue a notice under section 148. See, maximum penalty where the amount can be levied if for any non-compliance can be up to 10,000. Maximum penalty. Yes. Next, appeal. There are types of appeals. First, so when the assessee is aggrieved from the order of any ACDC, right? Any assessing officers, AOs, then next he can do commissioner appeal. So even there, if he is not satisfied with the order, then he can appeal tribunal. Next, High Court, then Supreme Court. When you are going for an appeal, High Court and Supreme Court will be of not with the material, it will be of state of law, not for the facts. So appeal orders are appealable before IT-80 are orders passed by commissioners, commissioner appeals, then jurisdiction commissioners, orders passed by assessing officer as per the direction of the dispute resolution panel, orders passed by assessing officer, penalty orders passed by commissioner, application for stay of tax demand, other miscellaneous applications for recall of orders. Yes. So money limit for applicable to filing the appeals where the tax demand is more than 50 lakhs. In such case, you can file the appeal against IT-80. The next demand is more than 1 CR. Then next, you can file the appeal for High Court, or if the demand is more than 2 CR, you can file the appeal to Supreme Court. But before filing an appeal, you need to keep a deposit, right? What is the deposit for CIT appeals? Percentage. Yeah. So 20%, 20% of deposits. So if you're going further, 10. Yes. The next, rectification. Rectification with the view of rectifying the mistake from the records and income tax authority referred in section 116. So there was a what order when the order was passed after the reasonable of being heard, but instead of 2 lakhs had given as 2 lakh 20, what 10 was added mistakenly. In that the order can be rectified 2 lakhs, the demand was increased to 20 lakhs. Then among any intimations or demands intimated under section 143, your summary assessment, but your summary, what intimation cannot be revised, only rectified. Among any intimations under this section of 208, that TDS, among any intimation under section 1 of 206, processing of TCS, amend the order in relation to any matters other than the matters which are so considered and decided in 154. Subject to the other provisions of this section, the authority concerned may take amend this either on own motion or when the mistake has been brought into notice by assessee or by the deductor collector, and where the authority concerned is a joint commissioner or the commissioner appeals by the assessing officer. So either on own motion or by the mistakes, where the mistakes are where the mistakes has been brought into notice to an assessing officer by assessee or any other higher authority. And amendment, my rectification, which has effect of enhancement of enhancing an assessment or reducing a refund or otherwise increasing the liability, where is an increase of liability or decrease of refund. Okay, and in such case there should be reasonable opportunity of being heard to be given before passing an order after the amendment of the rectification order. So who covers in income tax authority? They can rectify their orders. CIT appeals. CIT ends the order is under section 263 and 264 can be revised. CIT Commissioner of Income Tax, it can be revised also. Who cannot will be covered in Income Tax Authority? They cannot rectify their order is IT-80 once it has been appealed. So IT-80 appeals, not Commissioner IT-80, then Tribunal and High Court, Supreme Court and Settlement Commission. Where time limit for revision, so moto or application made. So 1 year from the date of order sought to be revised, assessee can't make application after expiry of 1 year from the date of service of order. Okay, CIT shall order within 1 year from the end of the financial year in which revision petition is filed. Clear? So either it can be filed. Either it can be filed on so moto for revision, sorry, for rectification, or the CIT may call for rectification or the filing by assessee. So the direct order cannot be issued. So there should be an opportunity of being heard to be given. So prayer in initiation of revision proceedings, the IT authority for the may call for the examine the records of any proceedings under the Act. After examining the records, the IT authority may form an opinion. Past is an erroneous or prejudicial to the interest of the revenue of the government. The IT authority has given a reasonable opportunity of being heard to the assessee, not restricted to revise the original assessment order, but includes revision of reassessment orders or rectification of orders. The IT authority can revise whole of the order to be made, okay, then revised or set aside the order on limited issue. Revision under section 264 is not possible if an appeal has been filed. If there is CIT appeal has been filed, like higher authority filing has been done, then revision cannot be done. Whereas revision is possible if assessee has not filed the appeal and the time of appeal has been expired. Audio. Okay. Then revision. So 263. So assessee got done. Okay. The audit, sorry, assessment under section 143, summary and regular assessments were done. Then give the assessment report. So if the report is accepted, checked, okay, there is no issue, and not found where the interest, so where the revenue has not been escaped, then that is the last point. Then check the report, found prejudicial to the interest of the revenue. Then 263 applies, where CIT, prior approval of CIT, can revise the order. Then opportunity should be given. Assessee rejects. If assessee rejects, he can apply to ITAT tribunal. If he accepts the difference amount to be paid in 264, where he has filed the return of income with the department and AO did the assessments, order has been passed, then AO feels or agrees that he may choose to appeal. Sorry, if assessee feels he want to, when the tax demand has come under section 156, he is agreed he want to choose to appeal. So in such case, agreed he may choose to appeal. Suppose not taken, still appeal has not taken, revision as the option. Okay, he can opt for revision or rectification, or rectification if there is no mistake. Okay, CIT appeals may reduce the liability. Clear? So revision can be done unless appeal has not been taken. He has not moved further for appeal to ITAT. Yes. See the word settlement. So after my assessment, he gave an order, tax demand. So if I'm not accepting, okay, if there was a mistake, and file for rectification. So if I accept, but before filing for appeal, I can go for revision of the order once again to be reheard. So to produce the evidence, what are the evidence are available? So whether to decrease the liability, if not, appeal to ITAT. Then also the assessee is agreed. Then for High Court, then followed by Supreme Court. The High Court and Supreme Court is the fact. They won't take into matter the material facts. It's the law, based on law. Next, settlement. So before concluding with IT or High Court, Supreme Court, you can go for one-time settlement to provide machinery of defaulting taxpayers to come clean through compromise settlement. A1 assessing officer, the offer speedy settlement of dispute to reduce litigation by providing finality of the proceedings, to resolve controversies in complicated cases, to ensure speedy collection of the tax at low cost. Yes. Then who can approach for commission, settlement commission? Any taxpayer, whether he's resident or a non-resident, can approach for the commission if in this following cases. One, the assessment for the assessment year is not yet finalized by the assessing officer, or his assessment for any assessment year is reopened. So again, the assessment has been reopened 147, and or is to be made afresh under section 254, 263 revision rectification. Okay, when notice under section 148 is issued for one assessment year and income also escaped in other assessment year for which notice has not been issued. So for one assessment, they have issued a notice. Okay, for one assessment year. The assessee know that in following 2 to 3 years, he has done the escapement of income. In such case, he can go for one-time settlement. He himself voluntary basis. He has not disclosed his income truly fully before assessing officer. Not willing to disclose. Now he is willing to disclose the same before the commission truly and fully, along with the manner deriving this such income. And the quantum of addition. So where you can approach for settlement, the quantum of addition is in respect of such cases, additional tax payment excluding interest before commission is more than 50 lakhs. In other cases, additional tax excluding interest is more than 10 lakhs. So application may involve more than 1 year, one assessment year. The aforesaid limits are applicable to tax liability arising on the basis of application and not on the each assessment year separately. In respect of consequence of wealth tax, there is no limit. So in Vivid Se Vishwas scheme, you will have already a notice, right? In settlement, you can foresee that. So you have received the notice for one assessment year, but you can think that even you know the fact that even for next 2 to 3 years you may get the notice. So voluntary basis you can go. In Vivid Se Vishwas scheme already the interest, late fees, everything is shown. Your order is given, right? There they'll say that waiver of interest, right? You pay the tax, but waiver of interest. So next, so DTAA. So in India we have so resident, not ordinary resident, and resident. If he's a non-resident, if he's a non-resident, if he has an income in India and other country, other country. So Indian income is always taxable in his hand. Okay. So when he's repatriating, taking back from India, okay. So already taxed income, again it is getting taxed. In such case, to avoid double taxation, DTAA came. So DTAA is not an act. It is an agreement where two countries come together, understand, and come and arrive at the common points so that the assessee won't be taxed 2 times, double time. Okay, and in order to avoid the escape of tax, so in DTAA, so what double taxation of income in the hands of taxpayer. So economic double taxation, judicial double taxation. So when he is repatriating from India to say USA, so again there he will be taxed in such case to avoid such taxes, or getting the income from outside India in India, getting the income to India. Such case he will be taxed in India also since he's a resident. Same income taxed in two countries in the same period in hands of the different taxpayer. Then same income taxed in two countries in the same period in the hands of same taxpayer. Eliminate the double taxation. So there is a source rule also. If taxpayer is resident in country but has source income situated in other country, a non-resident receiving an rental income in India or receiving an income on his Indian account, right? Source account. So income is to be taxed in the country in which it is originated, irrespective of whether the income accrues to resident or non-resident. The power of tax should rest with the country in which taxpayer resides. So he was basically an resident of India. On the base of employment, he went to abroad, so he settled there. Now he became a resident of that country. He don't have any source of income except rental income. So when he want to repatriate income, such cases, so double taxation will take place to avoid DTA. So two types of relief. So one, when there is an agreement between two countries, say India and USA, India and Dubai, such as. So two agreements where bilateral relief, there would be specific percentage to will be given. And if you paid the tax in India, no need to pay the tax in USA if the TDS has been deducted at highest rate of 20%. So now 30%, right? Marginal rate. Bilateral relief is for situation in which DTAA has signed between two countries. And the two methods of segment is exemption and credit method. Or if you have paid the tax in India, so you want to repatriate to USA. So there would be a condition that I won't waive off the tax liability on that. Instead of I give the credit to certain number of period, or based on the utilization I can give the credit to next upcoming tax liability set off. Whereas in unilateral, where there is no agreement with that country, such case unilateral relief is given. That is, the home country is responsible for offering the tax relief and preventing double taxation. Under section 91 discusses the unilateral relief. So how the relief is given? So the relief is given in first you will calculate if there is no double taxation, calculate income as if it's an Indian income. Indian income, calculate the tax liability. How you calculate the tax liability to residents? Similar way. The next, calculate the average percentage. Average percent, the taxed in India. Next, average percent taxed in other country. Tax paid in that country. Whichever is lower is taken the percentage as relief. Under section 91. Clear? The balance to be paid. So can we move to next? So this is the computation. So calculate your total income, then includes tax liability surcharge, average Indian income, first Indian income, then foreign income, then whichever is lower rate, okay, then relief will be calculated. Clear? So one question, can it be solved? Can we solve one question? So first solve, okay, under two methods also you can solve, okay. So first solve in a new scheme. Yeah, we'll get better understanding from the question. Kalpesh Kumar, a resident individual, is a musician deriving income of 7 lakhs 50 from concerts performed outside India. So his foreign income is 7 lakh 50. Then tax of 1 lakh was deducted. So while receiving, he already have deducted TDS of 1 lakh. When he performed, India has have not have any double tax avoidance agreement with that country. His income in India amounted to 30 lakhs. So total is 37.5 lakhs. Computing net liability of Kalpesh Kumar for the assessment year 24-25. That is your 23-24 financial year. Assuming he has a deposit of 1 lakh 50 in PPF fund, paid medical insurance in respect of his father, resident in India, age 65. So 52,000 he has paid. So maximum is 50,000 exemption. Calculate the tax liability under new scheme. Just give a try. Tax liability, sir, not total income. Answer for this question. Please try. 8 lakh 26 800. No, no, please try again, sir. It's wrong answer. How tax is nil? It is taxable. See, they don't have double taxation agreement. In that case, I need to calculate the relief. 624 is wrong. 652 is also wrong. See, 858 is right, sir. But what about relief? Relief. So, yes. So first, my Indian income, my Indian income is 30 lakhs. It's in my new regime. Yes, new regime, no deduction. Foreign income, 7 lakhs 50. So my gross total income, clear. Any doubts still here? Yes. So in my new regime, what is the tax liability? Please tell me. Yes. New regime. So up to 3 lakhs, I don't have any tax, right? Tax. Since I'm in new regime, so deductions not available. Deduction is not available. Then my total income. Total income is 3750. Yes. Next. So first 3 lakhs, no deduction. 3 to 6 lakhs, 5% deduction into 5%. right? Next, 6 to 9 lakhs, it is 10%. So again, my 3 lakhs into 10%. Next is 9 to 12 lakhs, it is 15% into 15%. The next is 12 to 15 lakhs, 20%. So the amount over and above 15 lakhs chargeable at 30% tax. So my amount is 37 lakhs minus 15 lakhs into 30%. Tax liability is clear, sir? Yes. Then my cess at 4%. So tax liability is done. Any doubt in this? Yes, I'll come. Next, to calculate relief. Okay, my Indian income. So at what rate I have? On an average rate of tax is, I will show what is my tax liability, 8 lakh 58,000, right? Divided my total income is 37 lakhs 50,000 into 100. 22%. At 22%, I am charged in India. Whereas foreign income, what is the rate? Average foreign income, average rate. How much I have paid? 1 lakh. Divided by what is my income? 7 lakhs 50. Yes. Into 100 means 13.33. So whichever is lower is my relief is 13.33. So on my foreign income on 7 lakhs 50, if I charge 13.33, I'll get 1 lakh TDS. Then my tax liability in India is 8 lakh 58,000 minus 1 lakh. Clear with new regime? Yes, 7 lakhs 58. Yes. If in case I'm working in old regime, my total gross total income. So in old regime, what was there? So what I had given in old regime? So PPF, I've invested 1 lakh 50, ATC 1 lakh 50, and insurance premium paid is 52. Maximum 50,000 is allowed. So deduction of 2 lakhs is available for me. So deduction of 2 lakhs. Yes. My total income taxable. Okay, in that my old regime, if I calculate first on 2 lakh 50 into 5%, right? 12,500. The next 3 to 5, 5 to 10 is 5 to 10 is 20%. That is 5 lakhs into 20%. Next, about 10 lakhs is 30%. So what could be my liability? Plus 25, 50,000 into 30%. So my tax liability will be 8 lakh 77. See, dear citizen, see, it is a father. See, public provident fund and paid a medical insurance premium in respect of his father, resident in India, aged 65. He is a senior citizen. to whom I had paid the medical insurance. Yes. Okay. Tax liability. Next, average rate. I need to get to know. So my tax liability divided by my total income after my deduction into 100. So percentage is 25% and your foreign income 13. So again, I'll be taking foreign income, whichever is lower. This is the received tax payable as per old regime is 8 lakhs 12,600. So whichever is beneficial. So I'll be opting for new regime where the difference is. So I'll be saving 54,600. Yes. So in where the DTAA is not there, in such cases, you'll calculate the income as if it is an Indian income. Then you will calculate the relief to that extent how much can be made, what relief, what given the exemption condition tax to be paid in that relevant country. Then clear with two regimes, right? So this year many questions will be there because there is more fantasies regarding the new regime to everyone. They say up to 7 lakhs I can issue. I can show my what profit this year. Still last year 5 lakhs was the last small business people. So this year they'll show the income. But the fact they don't know that after declaring they can't go back. They can't opt out the new regime. And in new regime, there is no benefit of deductions. Then once again, so it is an average. See, once I've checked average, so I will calculate my income, Indian income, like including my Indian income and foreign income. Then next, average rate at which I'm charged, excluding the exemption, not including the exemption. So average rate is 22. Then next, foreign income is charged at 13%. Whichever is lower will be given as relief. Yeah, yes, because the exemption limit. So even though you have up to 7 lakhs, you will have a rebate. How, sir? What matters? Only 5 lakhs you will have a deduction. That's it. So this 1 lakh TDS I had, right? In my question, see here, initially, before getting 7 lakhs 50, 1 lakh already TDS is paid in that country. So that country, so again, this amount is taxed in India. So double taxation, right? So to get where there is no agreement, provide the relief to the extent recalculation. It is that's 1 lakh, whatever the tax I've paid, divided by my income. My income was 7 lakh 50 into 100 percentage. So 13.33 percentage. In new regime, no deduction. Whereas this percentage on my total taxable tax liability as calculated divided by my total income into 100, 22.88. So one more, have you heard about transfer pricing? Transfer pricing. So is all the transactions, if agreement is there, there will be a specific percentage given. specific percentage will be given. So to that extent, it will be what given the relief. Or here, so when you're getting back the amount, so you'll not be given the relief. It's instead of that, you'll be charged at 5%, 10%. For example, equalization duty 6% at reasonable rate, right? Instead of going of 28%, I'll be paying just 6%. Rupees converted. See, TDS in that country will be paying in that country currency, right? When you convert both, when both is coming into India, right? He's an Indian resident. So that is notified in income tax portal. As of now, I know is where I had given 15 CBR, where it is India, between India and USA. But up to what 100 countries, they have made an agreement. So now they are going for multilateral agreement where all the countries together they'll come to a common understanding. So before we had just unilateral agreement, sorry, bilateral agreements where only between two countries they used to have a common understanding. But still that multilateral agreement is not in force. So salary people they're receiving outside, they're not repatriating. So there is no income arise in India. Then in that case, they'll first of all they'll not be an ordinary resident, right? They'll default if they are more than 182 days not in India. So clearing with all that, not an ordinary resident, then in that case it won't be taxable. Yes. The next topic, small topic, transfer pricing. Which cases transfer pricing is applicable? DTAA, double taxation agreement. Yeah, it's a treaty. Yes. Okay. As per law, agreement not enforceable, right? Yes. Sir, what is transfer pricing? So which of the transaction transfer pricing will be applicable? Transfer pricing, business. Yes. So in case of manufacturing, well, if I'm manufacturer, I have in India only. I don't supply anywhere outside India. Branch to branch, yes, near between person related, okay. So you're saying in relation to Indian income only. Inter units, why there is no international transactions? So whichever is lower, TDS. Sir, percentage, if example, if average Indian percentage was 15, say, sorry, say 12% charging in India, whereas in foreign it was charged at 20%, then I will take 12%, whichever is lower. So first, from your income tax portal, you can apply. So there will be a failure. The option will be there, no? There you should apply, give a reason, reapply, and provide the correct bank account. Then once it is processed or not processed, you will get the mail. Based on that, you can move further. So 22.5. Madam, 22.88 based on average rate. So I have calculated as per my, what you say, income tax slab rates, right? So the total liability is like 58. So in order to make an average rate, okay, on my total income, so I'll be calculating the rate to provide the relief. Yes. Foreign company having a branch in foreign country. Yes. Next, worksheet. Yes, I'll be sharing. Yes, tell me. So, can transaction between associate company. So next, so any interest paid or based on expenditures such as giving the royalty mainly between associate companies. Right. So transfer pricing is occurred when there is a transactions between the associate companies. Yes, Indian and foreign company. Okay. Then next, there and if any, even if the association means associate company means if if the transaction has happened whether in to check whether the transaction has happened in arm's length pricing or they in order to evade the tax they have reduced the income. So example, mm, solution is in PDF. Okay. In India and Singapore. Say in India it is taxed at 30%. Okay, general rate. Where here there is no tax. Okay. So what I will be doing, I will sell the goods at lesser price. Lesser price. From here, I have an company. Okay. From here, I'll be doing the selling all over the country. Country A, country B, country C. No tax. I'm reducing my tax liability, evading the tax, right? So to have a check and audit, so transfer pricing is in place where the transactions between the associate companies, enterprises, clear? Or I don't have any power, but the board of directors of this company, okay, the board of directors of this company has a major shareholding or a control year. So they'll be having a transactions at a lesser price than a domestic sale. So in transfer pricing, there will be a check. There will be a check whether the sale happened outside country or a transfer pricing, or sorry, or a price at which sold to your associate enterprises, then with compare with others. Done, sir. So the returns will be filed in November for transfer pricing. Okay. So in tomorrow's session, I'll be taking with other case laws also in 2 hours. Combination of all four subjects we can do. So any doubt in this session? If Session 4. Yes. Order sheet, assessment order, tuition. So in that case, you should follow when the refund is not credited, need to follow or make an application. When the refund is not to get the reason for what purpose refund is not allowed. So as per act, which the relief will be given on whichever is lower. So if foreign income, if I paid 25% tax, then the relief will be up to 22.88%. That's it. So whatever the relief is there, your whole income is exempt, right? Lower of both. You can't claim refund. So there will be non-tax liability, but no refund. I'll just come back. I'll just combine and give all the PDFs together. So tomorrow morning we don't have session. Evening we will have a briefing session. Like it's an overall revision. So all the 4 subjects. Okay. So where when we are doing accounting, we won't say that okay, since I'm an accountant, I don't take consideration of tax or I don't do GST, right? If I want to pass an sales invoice, I need to take GST into consideration. If I'm making a payment, I can't say I don't take into consideration income tax, right? TDS is there. So with one what will develop like a one small case where all 4 will be applicable. So how do we react to that case? It's just the own each perceptions can be taken. And just getting merged PDF. Yeah, it will be of your discussion. Okay, all 4 sessions direct tax law paper PDF is shared, and in your institute link also you will be getting that sheet. So this is your last minute revision what material. So don't depend completely on this material, but have a look on this material. It's in just a simplified manner to understand. Tomorrow, start 6 o'clock, we will have a case study base, like all 4 subjects will be discussing. Yes, tomorrow 6 o'clock evening. Just a minute.
One interesting question has been
Yes,
raised
sir.
in the text
Okay.
box.
I was calling you.
For example, as per 26 AS,
Yes, sir.
our income shows rupees 10 lakhs. As per AS report, it is showing 9 lakhs. Which report I need to correct into consideration? Does cumulative FD interest will show 26 AS because the majority of FD is after 3 years. So where I have to show, ma'am. So, sir, this 26 AS or your AIS is just only a information sheet, and that will be used if there is any mismatching of your returns filed. Okay. In accordance to the accrual basis, you can account accordingly, you can file your return. If your 26A shows cumulative FD interest, because if it is paid in the last year, if you have accounted for in the previous years on the accrual basis, if you have offered it to tax in those years, no problem. If you are not offered and the bank is also not allocated and the bank is now giving and now you are offering, then also no problem. But the income should not be escaped. Somewhere it has to be accounted, and accordingly it is to be offered. If there is an exemption, you can claim exemption. If it is previous year, you can claim it to previous year. So that's what actually they mean, that information system, that is all. Right now, madam?
Yes, sir.
So this IAS and this 26 AS are only just to give that annual information system, that's all.
Yes, sir, and our income tax yes. Our portal
madam.
is in developing stage. And one more thing, see, if the other party files his GST return after his due date, so in that financial year, it won't be reflecting. If you just check
Ah,
as per GST.
yes. It's only everything is under progress. Okay. Just we have to be very diligent. We have to be very accurate. We cannot act only upon the information which is available, or we cannot go in accordance to our choice. So there is a system. In accordance to that one, we have to follow. If we follow the system, nothing will happen. Okay, in adverse way. Okay, that what actually we generally call as no loss for no loss. No loss, no loss. How to carry it forward TDS or income, which is uploaded in 26 AS as a provision, but invoice raised next year. Definitely, sir. If the invoice is raised in the next year, the party might have been paid as an advance. Okay, that both you have to settle in between. Otherwise, if he shows it's an expenditure and if you raise the invoice in the next year, totally it deviates. If it is goods or service, accordingly you have to both, a clap should happen properly. One-handed clap will not happen. So, Raghavendra Rebballi sir, and any advances paid, automatically that will be subject to TDS. So that does not amount to any advance, income. Okay. Okay, tomorrow in the evening, we will have 2 hours program. So that what actually madam has rightly told. So you can never say, don't tell anything about GST. Don't tell me anything about income tax. Don't tell me anything about your establishment. Don't tell me any other notices. If you are dealing, you have to deal in such a manner that you are a knowledge banker of supportive compliances. The supportive compliance covers everything. Okay. So tomorrow, madam will take you in such a manner so that how these 4 mains are helpful in your profession, and also how you are a supportive professional to the trade and industry. Okay. GST turnover is 4 crore 67 lakhs and showed in ITR same value, but 26 AS 5 crore showing TDS cut on advance value. After notice reply, but they disagree. If they disagree, you go for a rectification, sir. You also disagree with the demand. There is a column in the income tax portal itself. You can also disagree. Okay, then they will ask reasons. If it is there, accordingly you can, otherwise you can go for other and you can type in accordance to what actually the right things are. Okay, registered regular route 24. Oh, then no problem. Regular registered February 2024, they can do only in July 24. If it is professional skill qualification. If it is from Medhavi, it will be next year only. Last year students can take now. Please facilitate offline mode. Okay, sir. This recorded version of the video classes will be made available to you. So for the whole 1 week, you can go through those videos. Okay. 23, 22, 23 written filed on 31/12/23. But not verified since the return is not verified within the time allowed. Same is deemed to be never furnished. February 2/24. How to proceed? If you are not verified, the return does not fit into the status of verified and filed. Then you have to file again. If that is invalid, you have to file an ITRU only. Now, they deduct TDS on total value, not taxable. That is all subject to that reconciliation, sir. That you have to prove the total money is actually they have totally shown there 100 rupees plus 18 rupees. My turnover is 100 rupees, not 118. Accordingly, that will take care. What for the year 16-17 claimed a refund because of TDS, but TDS credit was not given. Now it has come to our knowledge. So what to do? Get refund or make adjustment demand. Sir, if any demand, sir, if any TDS you have not claimed, okay, within 5 years, you have to claim. You can see 16-17 when you have filed a return. If it is within 5 years, you can apply for 154 rectification and accordingly you can get. But the same cannot be adjusted to any other year. Okay, madam. So we'll see you tomorrow.
Yes, sir.
So
Yes, sir.
thank you. Thank you one and all.